For holders of both XRP and Ethereum, what we are witnessing at the moment is very historic. Recent trends in the cryptocurrency market are laying the stage for what may be the most significant change in liquidity this decade. The focus for now is on Ethereum. According to past events, the remainder of the cryptocurrency market, particularly XRP, not only follows suit but also experiences an explosive price increase. What's happening with Ethereum today could trigger the largest XRP rise to date, and you're going to find out why this moment is essential. Your money isn't being advised here. At the moment, Ethereum is receiving a flood of capital. What follows is obvious to anyone who has spent any amount of time in this market. Until Ethereum reaches its goal, the institutions and whales will ride the wave. They will then invest that money in the next major player. The altcoin space will be utterly chaotic after that. Everything points to the fact that we are getting dangerously close to that breaking point, which is why I'm sharing this video with you today. I must place something monumental before we delve into the details of what Tom Lee recently said regarding the future of Ethereum and why it is relevant to the next move of XRP. The definitive approach to become a billionaire investor and locating 100x stocks is available in the pinned comment. Here you will find a wealth of information, including documents, photos, videos, and detailed instructions on how to identify the assets that have the potential to revolutionize your life. You'd have to be insane to turn it down because of how excellent it is. Use my Moomoo link to get $100 in free NVDA stocks, and you can get up to $1,000 in free stocks with a $1,000 deposit. It's a no-brainer to position yourself while you can. Let us return to Ethereum now. The price of Ether surpassed $4,000 only last week. It is now hovering around $4,200 at the time of this recording. The $4,000 price objective that Tom Lee had forecast earlier this year was utterly destroyed by that. Additionally, XRP has been subtly easing up, taking a step back to prepare for its own subsequent surge, while ETH's run has been phenomenal. None of this points to a downturn. Once momentum rises again, it's a textbook example of a healthy correction. Here, Tom Lee's viewpoint is intriguing. He made the observation that, at least for the time being, the price of ETH is not always determined by its fair worth. More volatility is being caused by liquidation levels being targeted, traders conducting pair trades, and short-term wagers against ETH. The most important thing to remember, though, is this. Lee thinks that Ethereum is currently experiencing its Bitcoin 2017 moment, because to the complete backing it has received from Wall Street. To what extent is that relevant to XRP? Why? Because back in December, we witnessed the same identical setting. The next wave of liquidity will likely go into other top-tier altcoins if Ethereum reaches a critical high and institutional investors begin to cash out. At the head of that line is XRP. A potential capital tsunami might hit XRP if Ethereum reaches its peak, which is expected to happen within the next 30 days. This pattern is not based on conjecture. It has occurred previously. And it's quick when it occurs. There is no trickle-down effect of liquidity as the tide changes. It swells. It happened in earlier cycles, and the current setup is frighteningly similar. The story, however, does not conclude with the price behavior of ETFs. Next, Tom Lee elaborated on how staking and treasury management are extremely crucial to Ethereum's ecosystem from a strategic standpoint. He drew parallels between the Bitcoin strategy employed by MicroStrategy and the accumulation rates of ETFs. MicroStrategy managed to seize 3.2% of the total Bitcoin supply in a few 5 years. Now picture the same scenario happening for Ethereum, ETH, at a rate 12 times faster than Bitmine. Indeed, that is the case. Plus, Wall Street is ecstatic because it's taking place within a completely compliant structure. Why? Simply said, Wall Street is looking for a transparent, legally sound, and regulation-compliant method to expose itself to ETH. And as Lee noted, Ethereum is unique among cryptocurrencies. It has all the makings of the leading blockchain for tokenizing monetary and stock market assets in the real world. Because of this, the institutions are flocking. But now we reach the turning point. The technology behind Ethereum is solid, but it isn't perfect. In terms of efficiency, it falls short. It's not the quickest or the cheapest way to make a purchase. Unparalleled efficiency, near-instant settlement speeds, and ultra-low fees are offered by technologies such as XRP's ledger. These are essential for widespread use. They play a key role. Ethereum is currently the hottest commodity on Wall Street. They're flooding in since it's a trusted name in the cryptocurrency industry and everyone knows it. However, markets grow and change with time. Investors start looking for superior technology once the initial excitement fades and true performance indicators are compared. Institutions will inevitably move on to XRP as a result of its scalability, low transaction costs, and faster transaction speed. Now for the exciting part. A singular occurrence may hasten this reallocation: approvals for XRP spot ETFs. If these ETFs are indeed set to begin in September, retail investors may be the first to buy, leading to a demand spike that institutions simply cannot ignore. At that point, things start to snowball. The cycle multiplies itself as liquidity compounds and price activity explodes. Ethereum isn't the final blockchain, but it will continue to play an important role. Right now, it serves as a jumping-off point. The smart money, however, will be keeping an eye on the assets that can truly underpin a global financial system in real time when Wall Street sets up shop there. Digital assets such as XRP. The current events are not coincidental. Once again, we see the same commercial mentality at work. When a liquid reaches its top, it begins to rotate. This time around, XRP won't only reap spillover benefits when that rotation occurs. It's ready to be the primary focus. Aside from being passive investors, Lee stressed that ETH treasury enterprises are essential infrastructure. These are the nodes that hold the network together and get rewards for staking. Nevertheless, this does not alter the reality that XRP's ledger excels at specific types of low-cost, high-volume global transactions, which Ethereum just cannot effectively replicate. Institutions will want exposure today, not in a few years, when they start doing the math. Because of this, the following 30 days are crucial. We are getting closer to the spinning point with each passing day as ETH increases. When it does, the capital shift might be the most dramatic and rapid in cryptocurrency history. The main point is this, but I could go on and on about Tom Lee's observations. ETH's current dominance is laying the groundwork for XRP's launchpad. Everything is setting up for a repeat performance of something we've seen before. However, this time around, everything is on a grander scale, with more participants and significantly higher stakes. The exciting part for XRP holders starts now. While Tom Lee is absolutely right about Ethereum being the Wall Street-friendly, compliant blockchain right now, the institutions that are buying ETH aren't doing so impulsively. This is where these same corporations will aggressively readjust following Bitcoin's previous big runs. Quickly after they've maximized their Ethereum gains, they'll shift their focus to the next top-tier asset that offers even more asymmetrical potential for profit. At that point, XRP will be the center of attention. Consider the implications of that. Large sums of money are flooding in from Wall Street, hedge funds, and sovereign wealth funds. These participants don't come in lightly. Entire markets are influenced by their hits, and when you mix that kind of funding with the XRP ledger's efficiency, you have a recipe for price explosions. As Tom Lee pointed out, we noticed indications of this in December. As liquidity spilled over, XRP soared to new heights while ETH topped and cooled. This time, the engine is revved up to full speed. A larger pool of willing crypto investors, easier access to exchange-traded funds, infrastructure that complies with regulations, and increased public awareness of the market. Additionally, it should be noted that the authorization of an XRP spot ETF has the potential to ignite this entire process. Inflows will occur regardless of news headlines once retail investors see the ticker symbol in their brokerage accounts. They will begin right away. Institutions will perceive that volume as a sign of increasing demand, which will prompt them to enter the market more quickly. A snowball can become an avalanche in that way. Even if Ethereum's staking returns and tokenization opportunities will remain, the cryptocurrency will face stiff competition from the most efficient settlement layer in the world. In that regard, XRP excels. You won't need to persuade anyone of the tech's merits because it settles what other chains take minutes or hours to complete in seconds. The activities of the Ethereum treasury go beyond the simple storage of currency, as Tom Lee recently noted. Financial infrastructure is being constructed. I understand. However, XRP's main selling point is that it was designed specifically for cheap, fast international transactions. This ledger isn't attempting to be a panacea. Its sole focus is on achieving the most efficient transfer of value. That level of specialization is what succeeds in the multi-trillion-dollar global payments sector. Capital markets are insatiably seeking yield, which gives XRP an additional advantage. Much if ETH staking rewards are appealing right now, they might get much smaller if more people start staking ETH. At the same time, XRP has institutional use cases that ETH can't imitate due to Layer 2 complexity. They include cross-border settlements and liquidity provisioning, both of which can produce yield-like revenue streams. In this hypothetical scenario, Ethereum's surge slows as XRP ETFs launch alongside expanded institutional infrastructure. The rotation configuration is ideal with that combination. Biggest funds and market makers are probably already plotting it out. This is the truth. These changes take place rapidly. The majority of the gains are frequently already in motion by the time the typical investor notices the rotation. It is crucial to prepare now for this reason. While we're on the subject of being ready, make sure to download the Ultimate Millionaire Investor Guide, 100x Stocks, from the pinned comment, if you haven't already. Discover potentially life-changing investment opportunities with this comprehensive bundle that includes documents, photographs, and videos. It's profound. Its purpose is to provide you with resources that you can put into practice immediately. In addition, by utilizing my Moomoo link, you can secure up to 1,000 free NVDA stocks with a $100 deposit. Just simply situating yourself, you're getting free stock in one of the most exciting firms out there. The market setup is now our focus. Recognizing how quickly public opinion can change is also important. It used to take months for money to move from one big asset to another in the earlier cycles. The modern, hyper-connected market allows for this movement to occur in a matter of hours rather than days, thanks to features like as on-chain analytics, social sentiment tracking, and round-the-clock worldwide trading. The statement, "A switch will be flipped," has a profound impact on XRP holders because of this. It won't be a slow drip when the story changes. There will be a sudden change in direction, and the leaders will reap the most rewards. Even if Tom Lee hasn't said it explicitly, the fact remains that compliant blockchains are merely the starting point for a fierce battle to the top. While Ethereum may be ahead of the curve in terms of launch date, it is still vulnerable to other platforms. Based on what we know about market history, in both technology and finance, XRP's foundations are ideal for the next big step forward in technology. Ripple's scalability, interaction with financial institutions, and liquidity corridors are all set up to take advantage of the influx of capital that will be coming once ETHF's run slows down. There is a scenario where Ethereum reaches its maximum, XRP experiences a torrent of liquidity, ETFs allow mass retail participation, and institutional demand locks in for the long haul. It's not just a hypothetical situation. The speed and transparency of Bitcoin are amplifying the same cycle that we've seen in different versions across multiple markets. Bottom line, as ETH continues to rise in value, the window of opportunity to position before this rotation begins is becoming increasingly smaller. We are getting closer to the pivot with each percentage point that ETH acquires. Plus, XRP stands to gain a lot when that pivot takes place. It will not hold out for anyone to catch it once the change starts.